All right, welcome back for another deep dive. Today we're really zeroing in on something that's key for anyone that, wants to make their money work harder for them.
Yeah,
That's the idea that you never really stop learning about investing,
especially when you're starting out small. Yeah,
especially with small savings.
exactly.
And we've got two great resources to help guide us today.
Yeah.
We've got FINRA's Investing Basics
Mm-hmm.
and a piece from investor.gov called Never Stop Learning.
Catchy title.
Yeah.
Definitely.
We're going to uncover how even small steps taken consistently can make a big difference over the long run.
I think the key is consistency. Right, over time.
So FINRA really stresses the importance of understanding the basics.
Yeah,
Stocks, bonds, investment funds.
sure.
It can seem intimidating at first, but it's really just like learning the rules of the game before you start playing.
It's a perfect analogy. I mean, imagine if you walked into a poker game and you didn't even know what a flush was or a full house. You're just going to get cleaned out, right?
It was this.
Yeah. So understanding the basics, like stocks, right? Like they represent ownership of a company. And then you've got bonds, which are more like loans that you give out for interest.
Right.
Those basic building blocks of investing let you make your own smart decisions. You're not just kind of chasing the hype.
Right. Speaking of hype, M&R also talks about disclosure and transparency in the markets.
Mm-hmm.
And that seems really relevant to avoiding those like hot tip,
Yeah.
situations.
Yeah.
So what's the deal with that?
I think it's all about making things fair, right?
Mhm.
Like leveling the playing field. When we talk about disclosure, we're saying that companies have to be upfront about their financials, about, what they're doing. There's no hiding allowed, right? So it's kind of like, if we go back to that poker analogy, it's like all the cards are on the table. And so you can actually make a smart choice, an educated choice, an informed choice.
Right.
Now, transparency is a little different. Transparency is about how open the market itself is. So can you easily see prices? Can you see the volume? How much is being traded? Who's buying and who's selling? And in general, the more transparent a market is, the less risky it tends to be.
Okay, yeah, that makes sense. And that ties in nicely with this investor.gov piece because they really stress knowing the why behind your investment choices.
Mm-hmm.
Like, don't just jump into something blindly.
Right.
Check those advisor credentials. Make sure you understand the fees.
Definitely avoid the scam.
And avoid the scams.
Yeah. And they actually go through some really important scams to watch out for, like pump and dump schemes.
Yeah.
Where basically, someone's trying to artificially inflate a stock price. They try to trick you into buying it, and then they dump all their shares, and you're left holding the bag.
Right.
That's no good. And they also talk about like offshore investments, which, sometimes sound exotic and very lucrative, but
Right.
often they operate outside U.S. regulations, so it makes it a lot harder to track and just much riskier overall.
Right. Yeah, those definitely sound like situations to avoid. So let's say you're just starting out and maybe you've got, limited savings. FINRA talks about kind of testing the waters,
Yeah.
especially through your company's retirement plan, like a 401k.
Yeah, it's a really good starting point.
So why is that a good place to start?
Well, for one, even if you're just making small, regular contributions, it can grow significantly over time. And that's thanks to this thing kind of compound interest.
Yeah.
Yeah, and just to give you an idea how powerful it can be, imagine this. You're 25 years old, right? You decide to invest just $100 every month. And let's say you get an average annual return of 7%. By the time you hit 65, that small, consistent investment could grow to over $280,000
Wow.
just from that $100 a month.
Wow. That's incredible.
Yeah.
And then if your employer's offering any matching, that's basically free money.
Oh, it's huge.
Yeah.
It's a bonus. It's free money just for investing in your future.
Yeah. And this idea of starting small and letting things grow over time, it really connects with the investor.gov
Yeah.
piece because they talk about the different stages of investing, right? Like starting out, gaining experience, and then becoming seasoned.
That's right.
And that continuous learning, it seems to be key at every stage.
Every stage, you're always learning and you're adapting your strategies as your finances change and as you learn more.
Right. So it's not about being like a financial expert right away.
No,
It's about like taking that journey, that learning process.
it's the journey.
And a big part of that, it seems, is about protecting yourself from fraud.
Absolutely, a big part. And investor.gov gives some really crucial steps. One of the biggest ones is just watching your accounts.
Right.
For any kind of suspicious activity. Like, you see a sudden large withdrawal or there's some transaction you just don't recognize.
Red flags.
Red flag. Always, always do your homework before you hand over any money to anyone.
Right.
Do your background checks. Be wary of anyone who comes at you with a pitch that seems too good to be true.
Unsolicited.
Unsolicited. And if it sounds too good to be true, it probably is.
Right.
And investor.gov, they give some really great tips on how to do those background checks. You can use FINRA's broker check, you can use the SEC's databases, and you can see if that financial professional has any complaints against them, if they've had any disciplinary actions, anything like that.
Yeah. It's like, doing a background check on someone before you hire them to work in your house, right?
Exactly.
You want to make sure, like, you trust them with your money. And especially when it comes to those offshore investments, investor.gov, they say to use extreme caution.
Yeah. And there's a reason for that.
Yeah.
Because those investments might not be under the same regulations and the same investor protections that we have here in the U.S.
Right.
So it's really important to understand those risks before you put your money into something like that. You could be exposed to scams, hidden fees. Do your research.
And that all just comes back to that idea of never stopping learning. The more you know, the less likely you are to fall into those traps.
It's like having a really good immune system. The more you learn, the stronger your defenses are against all those financial scams out there.
I like that. Okay, so we've covered a lot so far. We talked about understanding the basics. We talked about the importance of disclosure and transparency, starting small, protecting ourselves from fraud. Where do we go from here?
Well, both FINRA and investor.gov, they really emphasize that there are tons of resources out there for investors.
Free resource.
Free resources. Available online, easy to access. It's like having a library just like at your fingertips. Articles, calculators, courses, webinars, all sorts of stuff.
Yeah. Investor.gov. They even recommend subscribing to their monthly investing quizzes.
Oh, yeah, that's a good way.
That sounds kind of fun.
Yeah, it's fun. And it's a way to keep your knowledge sharp. Stay engaged.
Right.
Think of it like a workout for your brain and for your portfolio.
Yeah, I like that. So for our listener who's, really wanting to get started, maybe even with some small savings,
Yeah.
What's the key takeaway here?
The key takeaway. Knowledge is power. Don't be intimidated by all the complexities of investing. Just start with the basics. Build that solid foundation. Never stop exploring. And those small steps taken consistently, they can make a huge difference over time.
Yeah, that's such a great point. So it's not about, being an expert overnight. It's about, just starting that journey.
That's right.
Of continuous learning and growth. Speaking of which, we've got more to cover in our deep dive today.
As we talk about this foundation of knowledge, one thing that really pops out from both FINRA and investor.gov is the importance of setting goals.
Oh, yeah, for sure.
Investment goals. It's kind of like planning a road trip, right? If you don't know where you're going, any road will get you there.
Right.
But it really helps if you have a destination in mind so you can map out the best route, right?
Yeah, absolutely.
And that's where this whole idea of your investment time frame comes in. It's all about aligning your investment strategy with when you'll actually need the money.
Yeah.
So are you saving for retirement, right, decades down the road?
Right.
Are you saving for a down payment on a house?
Yeah.
Maybe in a few years. Or is it even something sooner?
Right, because if you're investing for retirement, you've got a lot longer, time frame.
Much longer.
So you can maybe take on more risks.
That's right.
Knowing that you have time to ride out any bumps in the market.
That is a key point. And FINRA, they actually emphasize this, the importance of patience.
Yes.
Especially when you're first starting out, trying to time the market or chasing those quick returns.
Right.
It's risky.
Yeah, that's like trying to catch a falling knife.
Right. Perfect analogy.
More likely to get hurt than actually make a profit.
Yes, exactly. Instead, they recommend this buy and hold approach, especially for those long-term goals. Weather the storm, focus on the steady growth over time.
Yeah, it's like planting a tree.
Yes.
You're not going to, keep digging it up every few months.
Exactly.
See if the roots are growing.
Let it grow.
Let
it flourish.
Let it flourish, yeah.
And speaking of nurturing, let's talk about something. Investor.gov really hits hard.
Okay.
Understanding fees.
Yes.
Those pesky fees.
They can be sneaky.
They seem small, but even tiny fees can eat away at your returns over time, especially if you're starting with a smaller amount.
It's like having a slow leak in your boat.
Yes.
Even a tiny one will eventually sink you if you don't patch it up.
Exactly. So investor.gov, they want you to really understand all the different types of fees associated with those different investment products.
Right.
Like everything from expense ratios on mutual funds to trading commissions.
Right, which can add up.
Absolutely. They
Yeah.
can.
Especially if you're, like, trading a lot.
Especially if you're trading frequently. Yeah.
Right.
They also talk about how index funds can be a really, really cost-effective way to invest, especially for beginners.
Yeah, it's like buying a slice of the whole market pie
That's a great way to put it.
rather than trying to pick out individual stocks, yeah.
Which brings us to another important concept, diversification.
Yes.
FNRA says it best. Don't bet the ranch on a single investment.
That's good advice.
Spread your risk across different asset classes, stocks, bonds, real estate, you name it.
It's like having a balanced diet, right?
Yes.
You're not just going to eat one type of food.
That's right.
You got to mix it up to get all your nutrients.
And just like a balanced diet is going to keep you healthy,
Right.
diversification can help protect your portfolio from those, inevitable ups and downs of the market.
Right, because if one asset class is, like, down,
Yeah.
another one might be up, right?
Exactly.
So it helps kind of soften the blow.
Cushion the blow. Yeah, it's like having a whole team of superheroes.
I like that.
With different powers,
Mhm.
all working together to protect you from the villains, from the volatility.
Yeah, I like that. And that's where I think that, never stop learning comes back into play.
Yes.
Because as you learn more, you get more experience, you can, like, tweak
That's right.
your diversification strategy.
Absolutely.
Right, and really tailor it to what you need.
It's like leveling up in a video game.
Yeah.
You start with the basic skills, but as you go, you learn new abilities.
Unlock new powers.
You unlock new powers, exactly.
Yeah.
So, we've been talking about starting small, and FINRA, they recommend actually testing the waters with your investments.
Okay. Yeah.
Begin with a smaller amount that you're comfortable with, get your feet wet, and then you can gradually increase your investment as you get more confident and more knowledgeable.
Yeah, that's a good point. It's all about being comfortable, not feeling like you have to jump all in right away.
Absolutely.
Right? It's your journey.
It's your journey. And if you need some help along the way,
Yeah.
FINRA actually recommends considering a financial advisor,
Yeah, those can be helpful.
like a personal trainer for your money.
Right.
They'll help you create a plan, stay on track, make adjustments.
That's a good reminder.
Yeah,
You wouldn't hesitate to go to the doctor if you weren't feeling well.
of course not.
So why would you hesitate to, like, reach out to a financial advisor when it comes to your money?
Absolutely. And investor.gov, they have great advice on finding a good advisor. Check their background, make sure they're registered, ask about their fees, all those important questions.
Transparency is key.
Absolutely. Transparency is key.
Yeah.
Be an empowered investor.
Yes.
Take control.
Take control of your finances.
And speaking of that, one thing that both FINRA and investor.gov really emphasize is this idea of avoiding the hot tips.
Yeah, I was just going to say that.
And get-rich-quick schemes.
Right.
It can be so tempting.
Oh, yeah.
Especially when you see people around you seemingly making money really fast.
Yeah, it's like trying to win the lottery.
Yes.
The odds are stacked against you.
They are?
It's just not a good strategy.
Not a good strategy at all. Sound investing is about making informed decisions. It's about research, analysis, and a long-term perspective.
Right. Patience.
Patience. Be a savvy investor, not a gambler.
And that requires knowledge, discipline,
Yeah.
and a commitment to that, continuous learning that we keep talking about.
Ties together.
It really does, yeah.
Take control of your financial destiny. Don't just chase those fleeting trends.
Absolutely. And remember, it's never too late to start,
Never too late.
even with those small savings.
Even with small savings, that's right.
This journey of learning about finances, it's an ongoing adventure.
It is, and it can be incredibly rewarding,
Yeah.
financially and personally.
Absolutely. So as we head into the last part of our deep dive today, let's explore some practical steps that our listeners can take to boost their knowledge and really make those informed decisions.
Let's do it.
Okay, so we've been talking about this whole never stop learning thing, especially when it comes to investing, especially when you're starting small. But where do you even, go to get this knowledge?
Right. It can be a little overwhelming.
It can, yeah.
Luckily, both FINRA and investor.gov, they got you covered. They've got a ton of resources, and they're free
Completely free.
to help you out on your journey.
It's like a 247 personal finance tutor.
Exactly, just a click away. So FINRA's website, they have this whole section, Smart Investing Courses. They cover everything, understanding risk, building a diversified portfolio, All that good stuff.
And they're broken down into, like, manageable chunks for
Yeah,
that.
bite-sized pieces, so you can, like, learn at your own pace, you know?
No need to be intimidated.
No, not at all. And then investor.gov, they've got their own treasure trove of stuff.
Okay.
Articles, calculators, videos. They make it, like, really
I
accessible.
was actually just looking at their askinvestor.gov.
Oh, yeah, that's a good one.
You can, like, literally submit questions and get answers from SEC staff.
That's awesome. It's like having a direct line
Yeah.
to the experts. And speaking of experts, both FINRA and investor.gov, they really stress this. Check the background of any financial professional
Oh, always.
before you work with them.
Before you hand over any money, do your homework.
Exactly. Don't just blindly trust someone with your hard-earned cash.
Right.
You can use those tools like FINRA's Broker Check
Hmm.
or the SEC's database, the Investment Advisor Public Disclosure Database,
Right.
and you can see if they've got any disciplinary history.
See if there's any complaints
So
against.
exactly. It's a smart move. It's like you wouldn't hire someone to work in your house without checking their background, right?
No.
So do the same thing for your money. Make sure it's in good hands.
And it's totally fine, to interview a couple of different financial advisors before you settle on one.
Absolutely.
Ask about their fees, their experience, their whole philosophy.
Yeah.
Make sure it aligns with, what you want to do.
Be an informed investor. Take control.
Yeah, be empowered.
Mhm.
Okay, so as we wrap up this deep dive into Never Stop Learning, I want to leave our listener with one final thought.
Okay.
Imagine yourself 5 years from now.
Yeah.
What does your financial life look like? What goals have you achieved?
What progress have you made towards those dreams?
Right. By taking these small steps today and starting with those small savings and really embracing this idea of continuous learning, you can make it happen.
Absolutely. You really can.
Keep learning, keep growing.
And never stop investing in yourself.
Happy investing, everybody.